Monsieur Saint Georges, with the policy change in the US, we will see rising government spending next year, for instance, in infrastructure. What does this mean for the US macroeconomics?
It's a major turning point. The US, like the rest of the world, has been very much under the pressure of budget constraints. For the first time in more than 5 years now, we're going to have a program of fiscal spending. So it is a turning point. It is important for the US, and the US being the US, it probably will have ramifications beyond the US. So yes, it is very important.
You spoke about corporate tax cuts in the US to come. This would mean a boost on corporate net income. Would this have an impact on investments?
Yeah, the plan on corporate taxes is the most important one. Infrastructure spending was going to happen anyway. It was part of Clinton's platform as well. But corporate tax cuts is really what is new in this program. It will boost corporate earnings indeed. It will also most probably encourage the private sector to spend more on investments, in particular if the general consumer morale improves. And therefore, it probably makes sense to expect that for the first time in more than 6 or 7 years, the US private sector is going to spend more on investments. So that is probably one of the most interesting consequences of this tax program.
Which way will take the US dollar next year? Will we see a breakout, a strong valuation of that currency?
The impact of the corporate tax reform could be quite forceful on the US dollar. The reason is that it's a bit like in the 80s. The corporate tax cut is basically attracting capital flows into the US. It will encourage US companies to invest in the US rather than outside of the US. And probably it will also attract foreign investors to make investments into the US. So the US dollar, which has been in a range for about a year and a half, could benefit from this movement and indeed break out from this range in a 12-month view.
The Federal Reserve is expected to raise interest rates next year, which means higher inflation in the US. So what does this mean for the American economy, and which risk scenario do you expect in 2017 concerning the bond markets?
The bond market are already reacting to this better economic perspective and also to higher inflation levels. Now, against that, as we talked before, you will have a rise in the dollar and probably some tightening from the Fed. So clearly, the bond markets are not the place to be for next year. Now, the question is whether there is a risk of a major repricing on bonds. And I would argue that the danger might not be so huge in the sense that so far the inflationary pressure we are seeing is really cyclical in nature. We're not talking about structural reflation taking place in the global economy. Cyclical inflation is something which fixes itself. So it does generate a need for repricing on bonds, and they were way too expensive, and so they are being repriced. But I would argue that until we see a much more significant structural rise in inflation, we should not expect bonds to get totally out of control.